welcome to the final episode of After the After Hours with your boy TraderPrad. The final day of this week is tomorrow going to be a free fall Friday. Now get ready for tomorrow. Powell going on the microphone. Powell going on the microphone again. Get ready for tomorrow. So I do have a watch list ready, but if you guys are ready, hit that like and subscribe. Hit that like and subscribe. Thank you guys for all the love. Thank you guys for all the support. This is your boy TraderPrad. But if you guys are ready for this show to get started, why don't we dive into the full screen and hit that like and subscribe. Probably really loud. Yo, what's up, chat? How you guys doing? Let me bring the music down a bit. Let me see if I need to bring my mic up a bit. No, my mic seems to be good. Music is a little bit lower. And let's bring out the hoodie, bring out the crazy hair, the Einstein hair, as some of my friends call it. Lost in my craft, so I had to grow the Einstein hair out. How you guys doing? Hopefully you guys had a wonderful day today. I had a pretty decent day. I shouldn't say decent. I had an okay day. I stuck to my rule for the most part, right? My goal was to not trade more than 5 symbols on the day. So stuck to that rule for the most part, except for the end of the day where my manager called out a trade. I said, I can break the rule for one of maybe my manager's trades, so I'll take one of those and see if I can get lucky and add to my PNL on the day. It did end up adding to my PNL, so I guess I made the right decision by doing that. But overall, only traded 6 symbols, right? The goal was to not trade more than 5, traded 6 symbols, and was a positive day, so I can't complain. Could have had a way bigger day had I done a couple things a little bit differently. We'll talk about my trades very soon. So had I done a couple things a little bit differently, could have had a way complete different day overall. As for the stock market, things looked a little scary for a second. It looked like going into Friday market, and specifically when I say market, I'm talking about the Nasdaq. Nasdaq is yet to take out the recent lows that we created in this week. So S&P 500 below the recent lows. You have Dow Jones below the recent lows. You have IWM below the recent lows, and the only thing that wasn't was Nasdaq. So Nasdaq pulls into that area today, and it looks like it was about to trap the market into a beautiful short side. Not that it looks like it did trap the market a little bit to the short side, and then pop back up into the close. Right back into VWAP. So did the market actually go back down later on? I can't remember. Usually in the later off in the day, I don't really remember how the market moves, but in the morning, obviously I'm way more attentive and I'm actually paying attention. I'm actually trading, so I have a way better memory for how the morning plays out. But overall, still very bearish market, right? PPI didn't help out the market. I guess we're just gonna wait for, we're gonna have to wait for, what's it called, not CPI, the Fed Day, which is on March 19th. So that's next week. That's going to be a very important day for everyone. Potential rate cut not happening, but potential rate cut was talked about recently. But we've seen the numbers yesterday. They said no rate cut coming in at the moment. We'll take a look at those numbers again today before we end the stream. You know, if you actually take a look at the market, for example, some of the big names, Home Depot, Walmart, Costco, like some of the bigger names where money actually gets parked into during recessionary periods are actually taking a bigger beating to the downside. So some big dip buy opportunities across the board. You could call this the dip. There'll be a dip of the dip, and there'll be the dip of the dippity dip. So you know, you gotta just be ready to keep buying the dips as you can, you know, slowly keep nibbling at it, and dollar cost average into your positions that you want to be involved in. Maybe some Walmart, some Costco, some just maybe you can even just start buying the dips on the markets itself if you're interested in that. But the market overall is officially in correction zone, right? QQQ, S&P 500 officially in correction markets. Maybe not S&P 500. I'll have to double check that. We'll check that for sure. Yeah, bearish sentiment across the board. You're not seeing buyers anywhere, and especially in some of the names where you think buyers would show up in. So we are seeing very similar to COVID type environment, and if we get a surprise rate hike on the March 19th, that is going to potentially shake things up and take the market really to the downside. So I'm not trying to predict anything, you know, I don't like to do that. That's a lie. Yeah, I'm very excited for the current market environment. This is the environment where you know, the day traders actually make some profits, make some good money. The volatility is fun. You got Trump coming out with the I have to turn on my webcam. You got Trump coming out with the catalyst every single day. Today it was the Russia catalyst. So Comrade Trump helping Russia and kicking out Zelensky out of the White House and then helping Russia. So pretty interesting move over there by Comrade Trump. You know, I'm not politically affiliated to either side. I don't care. I'm not American. I guess I should care because you know, he is causing issues with my Canadian country over here too. But overall, you know, he is causing issues with everyone around the world. Europe, Euro tariffs, Canada tariffs, China tariffs, counter tariffs, reciprocal tariffs to the counter tariffs. So it's just like non-stop craziness all across the board. And obviously all this uncertainty and all this headline market that we have, you're seeing investors actually saying, you know what, I rather be cash at the moment. I do not want to deploy my money into the market with these kind of swings. I rather be cash, and that's why you're seeing some real offloading across the board on especially the Dow Jones 30, you know, getting below its recent lows, while as the Nasdaq is not yet. Is kind of scary, because that means the concentrated 30 names are very weak over here. And once the tech basket blows up, there's just going to be a lot of empty space for all of these basket of stocks. All right. Anyways, I'm not a macroeconomics guy or a macro trading theory guy. I'm just a person who punches keys and tries to make money intraday, day-to-day trading. So let's talk about my trades on the day, and then we'll talk about the stocks that I might be interested for tomorrow, such as the earnings baskets and so on. So my best trade on the day, and also possibly my worst trade on the day, Adobe. My worst trade, why? For taking that profit over there. So I figured that you know, if I take this breakdown, the stock could potentially flush immediately, and then I'll be able to take some profits over there. and then on the pop back up I can kind of get back in. So that order just stayed out, and I forgot about that order. So sadly, I add to my trade that the original idea never played out, but later on I see a little bit of a tight consolidation. I add to my trade breakdown, and you know, I cover too quick. So kind of bust my nut too quick over there. Sadly, don't make as much money as I should have been making on this trade. Later on, I see a little backside scalp entry coming in over here, so I try to take that, and that one doesn't really have any follow through. I did have a bunch of opportunities to get out for break even, but yeah, you know, I stuck to the stop. I took the SMB trade. The stop was at the low of these two candles over here, and that triggered. And if you can see, actually, that ended up being the right idea, because later on the stock pushes right back into low a day, breaks low a day for an even bigger move to the south side, almost a $10 move from where I entered. So had I actually had all of my size all the way down over here, that would have been a whole different story on the day. But I don't think I would have been able to hold it past this area. So even the full size around this area would have been the ideal exit, and that would have been a completely different day today, especially after being so selective on my trades, being so selective on the stocks that I trade on the day. So being selective because of the daily ranges, being selective because of the in-playness, being selective because of the market. So one of the selective stocks that I picked besides Adobe was Apple. Took a little bit of a trend line break. If you draw a trend line over here, you can see how Apple kind of breaks that trend line and then pops and then rejects on that pop by breaking below the previous candle low. So I take on that candle low breakdown, but not much follow through on that pop. It pops back up, but then immediately on the flush it just doesn't have any follow through. So I take that flat exit, break even exit, and you know, I stop myself from getting into another trade in this area, and I tell myself, Prad, just wait for the low a day, wait for the opening range breakdown. So I did that. I waited for the opening range breakdown, but I noticed that the move from you know, a little bit higher than VWAP all the way into low a day was almost a one straight move, and I wanted a little bit of a consolidation, some congestion, some back and forth action before I take the breakdown. Sadly, that didn't really happen, so I took the starter just to have the trade, and then later when the congestion and the little back and forth actually took place, I added hard to that position. Sadly, got stopped out. That one hurt my feelings a little bit, but later not enough to hurt my feelings to the point where I don't get back into the trade. So I get back into the trade, and then I turn a red name to the green. So Apple, my second best trade on the day today, basically an opening range low a day breakdown. If you look at Apple on the daily chart, this is also you know, below 219, which is a big level, and 217, 218 was actually a level we created, I believe, on Monday or Tuesday. So getting below all of those levels and staying under that is a really weak indication on Apple, whereas if you take a look at Nvidia, it was fairly strong on the day. So if the market's going to be weak, I'm going to look for the stocks that are weak along with the market and join them to the south side. So Apple was my choice for that one. However, I had to give it like 3 tries to catch that one. SQQ, this was the stock that I broke the rule for my 5 stock limit. My manager called out this low a day breakdown, basically QQQ breakdown on the low a day, or you could call the SQQ high a day breakout. Not taking the original breakout, but then waiting for a range to form and then taking the breakout of that range. So taking the breakout of the range, and then another breakout a high a day, giving some scalps, and then sadly getting stopped out for break even for the rest of my shares. Just a quick little scalp. Market goes exactly into that recent weekly lows and bounces right off of that. So SQQ kind of just reverses right back to the south side. CRVO, the chart is down here. So let's go to CRVO. Opening range breakdown on a small cap name. This name actually popped up yesterday. Today kind of tried to trap some more shorts, but the shorts just weren't having it. The stock didn't have any follow through. No buyers were actually stepping in to ride this position back to the high side, and everyone knows that these small cap names are just, you know, or as they call it, gapper crappers. So if this is a day 2 crapper, then you're looking for the nice opening range breakdown, taking that short, scalping on the way down. Later on, the stock had a nice consolidation into lower day, almost like a bouncy ball setup, taking that lower day breakdown, but being too greedy on not taking any profits on on this consolidation over here. So should have taken profits and then potentially getting stopped out for break even. I just put a stop at break even and moved on from CRVO. Coming back up to the last few stocks that I traded, Intel and Path. Intel had the CEO news, whatever, but right into this $24 area, you can see how it tried to take out the day's high and failed. Then it tries to push back into the day's high and then fails again. This is kind of the stuff scalp from S&B Capital in one of their latest videos that they posted. But right here above the pre-market highs, you can see there was a little bit of a flat bottom, so basically a buyer. So if that buyer cracks, I figured I can get into a starter, and then if the stock actually starts to get below VWAP, I can add to the position. So it has a little bit of a back and forth, another buyer from VWAP, in which case I just take the crack of that buyer of VWAP to add to my position. It sets up, I take the crack, but it just happens to be that little tick where it goes below VWAP and then pops right back up. It does that, so I put my stop above this range high and I move on from it. I try not to mess with it. Later on is just in no man's land for the rest of the day as the market's going down. Intel's just chopping sideways. A little opportunity sets up again. Good consolidation into the lower day, into the opening range low. Looking for that breakdown, and that breakdown doesn't have any follow through, so immediately getting out of that trade for a tiny little loss. I think this one was a 15-cent loss. This one was like a 20-cent loss, so not real losers on Intel. Just took an attempt, didn't work out. Took like a C shot on a C setup, so I'm okay with it. But had it actually started to work to the downside, I would have added hard in this area, especially on pops, and then turned this into like a A-level trade. So what I gave it the respect that it deserved, and thankfully not too much of a loser over there. This is where most of my losses, or all of my losses on the day, really come from. UiPath, I was very bearish on this one yesterday on stream, and that honestly bled into me being overly negative and overly opinionated, not really opinionated, but overly bearish and really forcing the short, you could say. Right off the open, stock pops into the $10 area, gets slammed back down, pops again into $10, gets slammed back down, and now I'm thinking, oh, we got a seller here, so I would love to get short on the next pop and a reject. But what am I doing at that whole time? I'm failing to recognize that on every single flush, stock is actually holding above VWAP and has like a really flat buyer into this 950 960 area. Every single flush just gets bought right back up. So I actually get short in a really good way, if you ask me for my opinion. Nobody cares about my opinion though, but I actually got short on a really good way. I waited for the pop and then I got in on the backside, but failing to recognize that the buyer over here is clearly aggressive and not moving their order is not good enough by me, because I should have seen that, cut my trade somewhere over here, instead taking a full loss and then trying to manage with the trade. Later on, I get back into the trade after seeing this little pop and then getting slammed back, very similar to this area over here. Pop and then slam, pop and then slam again. So I take a small entry here again, risking the high a day, and that was basically my one and done for my trade. If this wasn't gonna work, I wasn't gonna do it anymore, and I guess I made the right call because the stock pretty much goes sideways for the rest of the day. However, I did break my setup game plan. You know, we game planned the stock yesterday with you guys, or I should say I game planned the stock with you guys yesterday, and that was to wait for the pop into 1050 and then short into the 1050 area. What does the stock do? It actually pops into the previous all-time high. Previous all-time high was 1030, or all-time low, sorry. Previous all-time low was 1037, 1040. It pops into that area. It pops into 1035, and it gives you multiple short opportunities off of that pops if you were looking for that, or even longs if you were looking for some sort of a mean reversion, as the stock was recently at all-time low. So a little bit of forcing the opinion. This is part of why I don't like to read earnings reports on stream, because you know, I like to throw in a little bit of a character. I like to throw in some opinion and some reasons to talk about the stock, right? It's like add some flair to the stream. Ooh, this looks pretty interesting. Oh, it's Jeff. That's S&B Jeff, right? Trying to see if I can recognize anyone here. I like how his thing just says, "Don't quit, do it." Oh, I like it. Don't quit, do it. I like it. Carlton, I believe. Ted Zhang. Oh, this guy is famous on Twitter. This guy's pretty cool. He posts a lot of great content on Twitter. Go check him out on Twitter. He's awesome. Or I should say x.com. X.com. Pretty good turnout over here, looks like, on Traders for a Cause at Miami. Anyone who's at Miami, who's at Traders for a Cause, and if you're in my stream, let me know how is it going. You're probably not in my stream if you're at Traders for a Cause right now, right? All right, coming back to my stream. That was my trades on the day. Hopefully you guys learned a thing or two of how not to trade, because that's all apparently I seem to be showcasing to you guys. Let's go talk about some of the stocks that moved today and potentially could set up for some activity tomorrow. Starting with the names that reported earnings. So, pulling up Benzinga. If you guys don't know what Benzinga is, then you are clearly not a trader. Benzinga is an awesome software that I use mainly for news and Squawk. They have an awesome Squawk service that I play throughout the day while I'm trading, and a news service that I use to filter stocks and news. So go check them out. Along with that, they also have heat maps, watch lists, scanners, charting itself. If you need a tool or oh yeah, I guess charting is a tool. If you need a tool to chart, so Benzinga's got your back on that. Check the link out in the description below, or in the chat that I just posted. You get 10% off by using my link. Right now, I'm going to use Benzinga to go read some earnings reports. Let me close this real quick. First one up on the board, DocuSign. I see some people in the chat right now. What's everyone talking? Obi's in Miami. Of course he is. He is a Lance fanboy, and he will go everywhere the Lance is. I mean, nothing wrong with it, but yeah, Obi. TH is in the house, obviously. What's up, TH? Laced Up Souls. What's up, buddy? How you doing, Mikey? Michael's in the house. PFE support at 25. I don't know if I really care about PFE. Let me go check the chart. Yeah, I don't think I really care about PFE. However, that possible breakout above 27 could be something. 25 could break down, but then it's gonna go to what, 24? Like, do I really care about that? I'm not sure I do. But if the stock starts to get above 27 at some point, I might be interested in that. So I'll set an alert for that for now. Besides that, I don't want to talk about PFE because that name is not good for day trading. PFE, OB's in Miami. Yes, sir. OB, we talked about that just now. Tesla could test 150 again. I mean, I'm not gonna predict. I'm not sure. It possibly could. It possibly can't. I'm just going to let the market do what it wants to do. Move and take advantage of said moves. Talking about which, going back to the earnings board. Let's talk about it. DocuSign reported 776.3 million versus 761.31. Okay, 86 cents per share, beating 885. I mean, barely. Up what? Billings up 11%. Total revenue increased by 9% year over year. Subscription revenue up 9% year over year. Billings up 11%. DocuSign said it repurchased 161.6 million of its common stock and ended with the quarter with 1.1 billion in cash. Outlook first quarter revenue to be in the range of 745 million to 749 million versus 755. That looks like a miss. The company sees first quarter billings in the range of 741 to 751. Full year revenue to be in the range of 3.13 to 3.14 versus 3.15. So why did the stock go up in the after hours? Usually bad guidance takes the stocks lower. However, you could say, I'm just taking off my socks right now because I feel like my legs are getting cooked in the house. It's kind of warm in the house right now. Taking my socks off, putting them aside. Oh, nice. Feeling the cold air flowing through the legs finally. Looking at DocuSign's report over here, I mean, looks like a mediocre report. Maybe you could say I personally hate DocuSign. 100% do, right? I 100% do. You guys know it. But DocuSign over here is just slightly above its 200-day moving average and looks like it actually bounced off of the 200-day moving average on the initial flush on the earnings report. So flush off the earnings and then a move back up, bounces off the 200-day moving average, so pretty bullish indication, but the guidance was guided lower. And if we go take a look at DocuSign's PE, I'm not sure if this is, oh, it's only 15. Okay, so it's a fairly cheap company in that case. So you know, it makes sense that maybe buyers are just waiting to snag up any shares on the dip, and as soon as they saw the dip into 67, they just immediately said, yoinkies, mine, give it to me. So DocuSign at the moment is having a bullish reaction. If you ask me, it's not that far from its recent highs compared to like the rest of the market, right? You got Apple kind of really beat down, you got Tesla beat down, you got Nvidia beat down. This one's most of the large cap stocks are actually below their 200-day moving average. This one isn't, while their guidance is actually lower than estimates. So I'm not sure if you can go around being extremely bullish on this move on DocuSign. Obviously, if I'm wrong on that and the stock starts to hold above some of these key levels, such as the $80 area on any dip, if it starts to hold above 80, then it's almost a no-brainer long at that point. You don't want to be fighting the shorts. You want to be looking to see if the stock can give you a dip into 80. If it's above 85, which is last week's high, that's even more bullish in that case. And if the market's bottoming out for the week tomorrow, right, if the market kind of has a little bit of a bottom and doesn't really sell off tomorrow, then DocuSign could use that as propellant, add fuel to the fire, use that as the rocket fuel to really blast off to the north side and start getting above 85. Overall, my bias is non-existent, right? So that's how you want to be as a day trader. You don't really want to have a bias ever. So just watching some levels, 85 as a resistance, 80 as the inflection, and then waiting to see if what was today's high? Today's high is, I think, around 80, so 79.36, so around 80. Ideally you want to see the support. If the stock is not holding 80, I'm not going to be going out of my way to look for a short, because you just have like previous ranges here. Maybe you get a move back into 75 from 80 to ride, but that means the short needs to be around 80. So your whole game plan is really around this $80 area. If it's around that in pre-market, if it's above 85 in pre-market, then your trading decision is around 85. So fairly simple over there. I don't think I need to put it in my notes. Hopefully I'll remember my game plan. Let's go to Ulta Beauty. ULTA. Ulta Beauty. You guys love the thumbnail for today, the Rihanna thumbnail from Ulta Beauty. Okay, Ulta Beauty reported the fourth quarter revenue 3.49 versus 3.46. Estimates were beat. 8.46 versus 7.14. Estimates were beat. Total revenue, however, down 1.9% year over year. Comparable sales were up 1.5% year over year, driven by 3% increase in average ticket revenue and 1.4% decrease in transactions. Ulta said it added 9 new stores in the quarter and closed one, bringing total locations to 1,000. Holy shit, they have that many locations. Merchandise inventories were up 13% year over year to $2 billion. Company ended the quarter with $703 million in cash and equivalents. Guidance. Fiscal year 2025, 11.5 to 11.6 versus 11.67. That looks a little bit like a miss. Company sees full year comparable sales coming in flat to 1% up. That doesn't sound good. Ulta Beauty anticipates full year earnings 22.5 to 22.9 per share versus estimates of 23.5. That doesn't sound good. And if you ask me, I'm not sure how much of Ulta Beauty's product line and other stuff depends on you know, China and Europe and so on, and those are all under the tariff conversation. So those are also some of the concerns over here. The stock did pop in the after hours off of what seems to be a mediocre report. They did not have a big rise year over year. They're actually decreasing year over year. They did beat EPS, they did beat revenue, but they're guiding lower for the next quarter. They're guiding lower for the full year. However, the stock still makes $20 a year per share. Okay, so they're not a broke company at all, right? So they clearly print money. It's a money printing machine. The PE is 12 for a stock that's $300. So people just want to snag up the shares, I guess. Where's the 200-day moving average? A little bit higher. People just want to snag up the shares at the moment on that report. But if you ask me, the guidance is lower, and with the current market environment, you might need to be careful. Be careful. Be careful. That's all I'm gonna say. For a long, you know, it's gotta really get above some of these areas, and I don't think we are. I don't think we are. We are somewhere here right now, 350. Is that where we are? 350? Not even. So last month's low is no, that's not it. Last month's low is 352.50. Today's high is, where's today's high? I guess today's high is 329.50, so that's basically 330. Yeah, I mean, I'm not really seeing in the report anything that makes me that screams at me that's saying, hey, this is a no-brainer long right off the bat tomorrow. So ideally looking for pops to short into, especially if the market's weak. So watching Ulta Beauty. RBRK. Next one, Rubric. Okay, a little bit of a pop on this. Let's go check what Rubric's PE is. Non-existent, so still yet to be profitable. How are you doing on the report? Oh, not bad. 33% year over year. How are we looking over here? Loss of 61 cents per share compared to estimates of loss of 80 cents per share. 258.1 million versus 233 million. Up 39% year over year. Subscription revenue increased by 54%. Total revenue increased by 46%. Okay. 79 compared to 77. This is 2% in the fourth quarter. Okay. Outlook coming into 33 cents per share loss compared to what they just reported, which was 66. 33 to 31 cents per share loss compared to an estimate of 40 cents, in the range of 259 to 261 versus estimates of 243. This is a good report. Finally, we see a stock actually moving in the direction of the report itself. Sadly, the stock doesn't trade a lot of volume. It's also one of the newer IPOs, 2024 IPO. Almost about to be a year since it IPO'd, funny enough. So watching this one, bouncing right off the 200-day moving average area. I'm laughing because, you know, stock barely has traded 200 days. So bouncing off the 200-day moving average area at the moment. And you know, the earnings report's pretty bullish in my opinion. Pretty bullish report. They're growing and they are losing less money than expected in the current quarter, and they're going to be or at least they're expecting to lose less money in the next quarter also. So overall, look for dips to buy on this name. Possibly a higher priority for me than Ulta Beauty, especially if the market's green. If market is green, I like the dip. I like the longs on this name. And alright, now stocks that report tomorrow after hours. Let me actually show you the earnings board over here. Stocks that reported tonight and stocks that report tomorrow. I think the only one I really care on my watch list, I might have WRD, but what even is WRD? I can't remember what it is, but I remember that it was okay, WRD, we ride. This is like a Waymo type of company, if I remember correctly. A brand new IPO, November of 2024. I remember trading the IPO itself. It popped to $44 here on what news? I can't remember this, but you know, immediately moving right back to the south side, and then the earnings report comes out over here for us to see if there is some possible opportunity tomorrow on WRD. So keep an eye on that one. Li Auto, XPEV, you have XPEV, you have NIO, you have Li Auto. So keep an eye on all three of these names to see if there's any fun across the board on the China #1 Chinese EV sector. Now let's go to the fun names, the ones that possibly are going to be the most important names tomorrow for me. Let me get rid of that. Let me get rid of that. Let me get rid of that. Go to the 5-minute chart. I don't need that anymore. I don't need this anymore. I don't need that anymore. And I basically deleted all my drawings. I guess I have one more line and I can get rid of that too. Yes, need that. Actually, no. Put that back. Put that back. Adobe clearly very bearish today. The report did not look bearish, or at least as bearish as the move was played out. So Monster moved to the south side on a good report in my opinion. They did guide I guess somewhat flat / lower. So big slam down. At this point, as long as the stock stays below 400, you're basically shorting all pops. So if it pops into today's VWAP, some sort of a day 2 opportunity, if it opens up into today's low and wants to go lower than today's low, I'm not sure it will. I mean, this stock is you know, once again very similar to Ulta Beauty, ADBE, in the sense that its PE is fairly cheap. It's very expensive in the notional price. It's a $400, I guess let's just say $370 per stock price, per stock share, price per share at the moment. So very similar to Ulta Beauty, but in the same sense as the opposite to Ulta Beauty, because it's going higher while as this one's going lower. I think Ulta Beauty actually deserves to go lower. So a little bit of what the hell is going on here type of question on this one. So watching for a day 2 play. Let me put that one in my thing. Day 2 trades on what? So for sure watching ADBE, potential long opportunities off of today's low, potential continue opportunities off of today's low, potential continue opportunities off of today's VWAP, and most likely my number one priority off the open tomorrow, if I'm not getting distracted by something like Nvidia or Apple, because the market's really bearish. Like if the market's really bearish, I might go trade Nvidia, Tesla, and Apple before I trade Adobe or DocuSign or RBRK. I hope you understand that. Very simple. My brother's home and he's blasting music downstairs, and my dog is fucking going crazy at the moment over here because of that. Okay, Pat, I don't know if I even should have this on my watch list, but I'll leave it in there as a backup plan. If it does get to 1050 and find selling into 1050, I'm interested in that short. Otherwise I don't care. Short 1050 area, or don't trade at all. Only short if it is weak around there. Okay. S. I thought the stock gapped lower, did it not? Yeah, it started lower and then it recovered itself, so it's right back into previous ranges. Not interested in S at all. Deleted from the watch list. Oracle actually had a news catalyst today itself, something about TikTok. That's right, I had a TikTok news catalyst coming out sometime today, but nothing burger. The burger is nothing. The burger is dead. So I'll leave it on my watch list. I just don't see any play on it. Intel, I'll leave it on my watch list for sure. But you can see how we got a lot of headwind, right? You got the 200-day moving average, you got that level, you got this level, you got the upper Bollinger Band on the daily, you got the gap close. So there's so many levels that it kind of has to battle with, that I kind of just want to be, you know, a little back hands off on this name. But it's always on the watch list because it's in play, right? Currently the sector is in play and Intel is having its own news catalyst. However, the CEO change news catalyst like is only good enough to trade for like 1 day most of the time. I think Intel is in that basket. Nvidia, like I said, if the market's really weak, this is where I start trading these names: Tesla, Nvidia, Apple showing you extreme weakness compared to the rest of the Magnificent Seven. So watching Apple for continued weakness on pops, watching not really Google, but watching Meta for sure for some fun, because Meta has like a very similar pattern to the Nasdaq itself. So if Meta can get below that low, potential move into the 200-day moving average and then a little bit lower. Don't really care about Amazon, Google. I guess I shouldn't say that. Amazon should be on the watch, because if we do get below 191, that could open up some fun for us. So let me put 191 on the watch list over here on Amazon. Nvidia, Tesla already are just like by default my high priority names. Ooh, have to burp there. And then Apple is high priority right now because it's showing you relative weakness as it is. Microsoft, MSFT also having a good flat bottom. Oh man, I did not want to put Microsoft on the watch list as a high priority, but I guess it's going up there. So whichever one of these sets up tomorrow, I'm going to be watching them to take advantage of it. 377. 377. Did I put Microsoft twice? There we go. Let's get rid of that. Meta, what was Meta's level? 587. 580s. This one's supposed to be MSTR. There you go, MSTR. Bitcoin still holding above 80k, right? Still holding above 80k. So if Bitcoin gets below 80k, I think that's when you really want to use MicroStrategy as your poison. But Coinbase is showing you some weakness at the moment. So Coinbase potentially getting below one of its recent lows, 177 or so. That could be something to keep an eye on. Robinhood showing you some weakness too at the moment. HOOD, that one's looking like it wants to go into the 200-day moving average. I really think Robinhood is something to keep an eye on for like the long term, or a swing account or whatever. Not the right term to buy stocks for swing, but if you want to start accumulating stocks for the long-term account, this is a lot of move to the downside on a lot of names that in my opinion, if you're willing to buy for the next 2 years, for the next 3 years, slowly, incrementally, this is when you start doing it. And obviously the market, I talked about the market. Look at the most recent lows. Pull up the markets for yourselves and mark up the most recent lows. If any of these markets get back above these lows, there is just no short tomorrow. But if the market continues to keep going below these lows, then you can forget about the longs, because it's about to be doomsday across the board. So how low are we from the all-time high on the market? We are currently down about 13% from the all-time high. Imagine that low breaking and the market going 1 ATR to the downside. So that will be a 2% drop to the downside from today's lows. And that would end up being I guess I didn't have to do that. I just I could have done that by my own mind. So 15%, then you got a 20%, and once the market goes down 20%, you're officially in recession market. So obviously in the bear market at the moment, and then very soon looking like we're gonna head into recession market. So put up the markers at the most recent lows, the Tuesday low on the QQQ, on the S&P 500, on the IWM, on the Dow Jones, and all you're doing at this point is watching to see how the market reacts around that level. Either the market rejects off that level, or when I say market, I'm talking about all of them, all four of them. Either they reject off these levels, or they show you some strength and some support above these areas, at which point you can actually look for some longs on the market. So that's kind of the macro idea and the day trader sense. That's going to be the barometer between me picking longs or shorts tomorrow. Last but not least, the econ calendar, pretty dead. You got the Michigan sentiment numbers at 10 o'clock. This is a volatile market, so these numbers, sometimes they're dead, sometimes they're nothing burger. For example, CPI and PPI and jobless claims, they didn't really move the market too much, but you never know what numbers actually move the market. So if these come out far from the forecast and surprise the market, that could actually move it a little bit, and you might get caught off guard. So 10 o'clock, make sure that you're being careful, especially if you're trading futures. If you are trading futures in this market environment and you don't have some sort of a news tool, a squawk of some sort, you're just asking to get beat up. So once again, I'll promote my tool that I use, Benzinger Pro. You get 10% off, and I have a bunch of other tools over here that you can go check out. These are actually softwares and products that I use on a day-to-day basis for day trading. And ladies and gentlemen, that has been the show. It's been an absolute pleasure. I'm gonna quickly wrap up the stream here because I want to go play with my niece before she calls it a bed. She just got home and she's gonna head out to go to bed already. So I'm gonna head out. I'll catch you guys next time. TraderPrad out. Peace. Have a great weekend and kill it on the market tomorrow. Kill it on the market. I'll be back to you Monday. Ciao. For tomorrow, ladies and gentlemen, so I'm gonna bring in my big screen over here, back to another brand new week of After the After Hours with your host TraderPrad. I'm doing great. Hopefully you guys are joining me on that great side. Markets are moving around. Might just be a risk on type of day, so let's see what happens. 8 o'clock tomorrow. As you guys know, we do the stream Monday to Thursday, 8 p.m.
Instagram. Shout out to my affiliate sponsors, Benzinga, Trade Ideas, the #1 scanner to go to. Trader Sync, promo code down below, promo code PRAD15 to get 15% off. I will catch you guys tomorrow, 8 o'clock, same time, same place. Until then, TraderPrad out. Adios.